Good afternoon to all of you. This is Ranjan from smartfinancing.com. So, in this particular presentation, I am going to explain you one strategy with chain adjustment concept. So, as you know, the option strategy is a very difficult job and it required lot of expertise to handle those strategies and you need lot of learning to do that. However, in a very simple way, I will explain the chain adjustment. So various type of adjustments are there. So you have profit capping adjustment, you have profit expansion adjustment. So these are my concepts of adjustment. So here chain adjustment concept we will be using. Our objective is to earn from theta. So theta will be earning and chain adjustment will use. So I'll be using two different strategies combination here. First is a half box spread. So I'll be so as you know this is we are recording on 28th of April and in the Delta platform I am using going to show you these things with Bitcoin. So here I have just taken a full Bitcoin, one complete Bitcoin, just to show you the management of delta, management of theta in that. So for that I have taken 1000 lot, one complete Bitcoin, so that you can see the net delta, how much it is there, net theta, how much is there. However, you can take it in 10 lots, 100 lots based on your preference, you can take. So here, as I said, I'll be doing these things with respect to combination of strategy and half box spread I will be forming. First, I am taking one half box spread with 90,000 put of longest available expiry. So we are on 28th April 2026. I am talking about June series. So May month is there, June is there, July series. So 31st July monthly expiry. So this expiry 90,000 put I am selling. So 90,000 put I am selling, which is $14,187. Along with that, I am just buying one 75,000 put, which is 4987. So this is what I did. One box spread I have just formed. So along with that, so this is a box spread. So I have to do a chain adjustment. So for that I have to create a facility. So this is a half box spread. This is half box spread in the put side. So I am going to have a chain adjustment because I do not know in future whether the price will fall down or it will go up. So I'll be market neutral. I'll be focusing only on theta. So what I did here, I just bought one 70,000 put of same July month also here at 3 to 24 dollars. So this is done one half box spread, one simple put option of the same size I bought it. So half box spread is in the put side. This is clear to you. And this is one put option I have added to facilitate the chain adjustment in future case scenario. Then, so this box spread whenever you form, so you are selling at 14,187. So almost this is having 800 to 900 theta. So you can say it is till 75,000. It is 75,000 plus level. It is there 90,000 minus 14,000 if you make it. So almost it is 76,000. So we are buying 75,000 put. So 70,000 put also we are buying same quantity. Box part is over. Now we will be going for our yield. So this is getting recorded on 28th April. Again, I am repeating. So we are concerned about the yield. We are going to get the yield either in the daily basis or in the weekly basis. So what I am going to do here, I am just buying one 80,000 call options of 31st July, and I am selling one 77,000 call option of 1st May. So 1091 level I am selling it. So my objective, again I will tell, my objective is to make money from the theta. So I may focus on the daily yield, I can focus on the weekly yield also. So for that longest available option, I have found a half box spread. To facilitate the chain adjustment, I have bought one 70,000 put option, and I am buying one 80,000 calls because here 75,000 put option I bought. Current price is 76,993. So I'm just buying 80,000 call option 2 to 3,000 point above this, and whatever the at the money option is there, first expiry I am selling. So what I will be after doing these things, what will be my chain adjustment concept, how I will play on that. So two things can happen after I initiate this strategy. So BTC may have a big fall or a small fall, or it should have a big rise or a small rise. Anything can happen. It can go up or it can go down, or it can consolidate in the 77, 76 range. Anything can happen. So all scenario is being taken care of here. Say BTC has a huge fall till 70,000. Till 70,000. I am talking about a huge fall of 6,900 points before 1st May. There is a huge fall till 70,000. So what will be my take? So if there is a fall straight away happen to 70,000, what I will be doing, my 75,000 put what I have bought, here I will be booking the profit, book profit here, and buy 65,000 put side after that. 70 put already you have. So no doubt that time this will be completely converted to profit, this $1,000, and that should be a loss here, 5437. That should be a loss here. So it is a longest date expiry, say 50% also lost here. But we are not going to touch this one. So what we'll be doing, it is just, it will 80K will remain as it is. What we'll be doing, we'll be booking the profit in the 75,000 put, buying the 65,000 put, and that time again we'll sell 70,000 call option of 70,000 call option of 2nd or 3rd May. 2nd or 3rd May. So my 80K call I will keep as it is. So I have just made a chain adjustment. 75 put I booked the profit. I bought 65,000 put, and my 70,000 put is still there, and 80,000 call will remain as it is. So 77,000 call option I will take a complete profit, and I will be selling a 70,000 call option of say 3rd May, 4th May, 8th May, anything. At the money options at that time I will sell. So imagine after that also it has fallen to 65,000. Say first fall was happened till 70,000. Second fall is happening till 65,000. So second fall time already you have 65,000 put. Book profit in 70,000 put and buy 60,000 put. 60,000 put and 80K put will be as it is, and sell 65,000 call of daily expiry or weekly expiry. So this process you will be continuing in a chain management wise in the downtrend. So imagine the opposite case. Say after you initiate this position, prices has gone up. So it has come to 80K level. So 80,000 level it has come. So you have a 70,000 put. You had a 70 put. So definitely that time 90 put will be at a profit. Your 80K put call also will be at a profit. However, you will be landing a loss in 77,000 call option. If there is a uptrend, so uptrend behaviors will be slightly different. Slightly different. What you have to do, you have to close in the uptrend. You have to close or book loss in the 70,000 put and buy 80K put. 80K put. 80K put. And 77,000 call also you have to book a loss and sell 80,000 call option. So your 80,000 call option is here. So whatever the losses you booked in 77,000 call option and a part of losses in the 70,000 put option will be covered or will be remaining in this 90,000 put option and sell 80,000 call options of daily expiry or the weekly expiry at that point of time. Now, after 80K, say price has gone to 82, 83 or 85, the same way 75,000 put option will be closed, 85,000 put should be bought, and preferably 80K call will repeat or 82K call will be selling in the daily or weekly expiry. So this is how your chain adjustment flow will happen. So normally this strategy is like in what kind of delta situation? So it is a full Bitcoin. 1,000 lots consist of one complete Bitcoin. So here, so do not, these are the theoretical projection of profit and loss. So unlimited profit will never get. It is a closed-end strategy. It doesn't have unlimited profit. So because of its, you can say, static nature of analysis, they are giving like that. However, we are more concerned about the Greek. So here, if you see the Greek, so for complete one Bitcoin, the delta is 0.11. Almost you have nullified the delta. Theta is 89 points and Vega is 309. So volatility, it's pretty good amount of volatility you have accommodated. Rise in volatility is going to give you great gain and theta is positive phenomenally great, but more important is the gamma. Gamma is almost null, negative, but decimal followed with three zeros and one. That says whenever gamma you neutralize to such a way that your delta will not fluctuate in a great extent. What is gamma? The rate of change of delta with respect to change in the underlying asset price. So Bitcoin is your asset. If Bitcoin price fluctuate by 1% plus or minus, what will be the oscillations the delta will get? That is what gamma. So if gamma is complete 0.0001 positive or negative, it says negative. So rise in 1% of the Bitcoin will invite 0.0001 negative expansion in the delta. Similar way, if there is a fall in the 1% in the Bitcoin price by 1%, the delta will fluctuate very less in positive side because it is negative down. And it is for the complete one Bitcoin, delta is 0.011. But our focus area is theta. So where we are for complete one Bitcoin, we are aiming for $88 of theta gain per day. So this is what our aim is. And we have kept the Vega as big positive. That means rise in the volatility will add more theta value to our pocket. So this is how this strategy can be initiated, and this is a chain adjustment concept. Chain adjustment concept. So here again I repeat, you have a box spread, and to accommodate the chain adjustment, one extra lot of put options you are adding below your box formations. Then you are forming one longer dated call option you are buying, and you are keep on selling at the money call options of shorter expiry. That is, maybe today you are selling for third day, you can sell for the weekly expiry also. So this process, your lot size of all these contract are same. This process, you are nullifying the delta, you are nullifying the gamma, and you are making the theta as a great positive. And you are also going to get benefited uptrend or in downtrend. But do remember, do not expect next day this profit has come. So since you have till July, you have the entire month of May, June and July, 90 days you have in your hand. After 5 or 10 days of harvesting the theta, if you are daily expiry ATM you are selling, and sometimes you are selling the same strike for 4 5 days. So focusing on the theta, after 5 or 6 days of harvesting the theta, you will be entering into the profit. Immediately from the next day, do not aim to get into the profit. 5 or 10 days you have to sell, harvest the theta, then out of 90 days, 10 days of harvesting the theta, you will be entering into the profit. 11th day onwards. And if the consolidation continues with a 5,000 price band, or 6,000 price band, if the consolidation continues, you will be going to get very good gain from the this strategy. So chain adjustment concept you have to follow. You have to follow the delta neutralization, gamma neutralization, and theta positive. So this will be your take. So similar kind of formation also you can do it in the Nifty, you can do it in the Bank Nifty. So longer dated options can be utilized for this box formations, and you will be forming the weekly formations, weekly things you have to sell to get profit from. So this is how you should work on the option strategy and make money out of option strategy. Thank you very much. Thank you for your time.